And welcome to another session in the first day of FinTech Connect, which is focusing on banks and challenger banks, which is really great because I think we've been wanting this in the industry to talk to banks and some of the providers that are solving some of the problems that are coming from merchant space and everyone in the sort of value chain of financial technology. Here we have a panel discussing and trying to come to sort of like a resolution in terms of what we think are some of the challenges. And our panel is based on building a resilient, future-proof digital transformation strategy. What is the new normal? And obviously you've heard this new normal quite a lot now in the times of COVID. So that's going to bring us to a few statements in terms of what we think that looks like. And we'll be trying to sort of understand and elaborate on topics around learning from fintechs to enhance digital infrastructure and become more agile, leveraging technology to shift digital infrastructure, and what do business models of the future look like. We have a panel that's a really great mix of fintechs and solution providers. I'm going to let them introduce themselves, but just to introduce myself and also allow everyone to sort of log on and start participating in this discussion. I'm going to give it probably a couple of minutes. What I would encourage you to do is ask questions. If you can, consider this as a free consultation period, so you can get, if there's any challenges you're facing right now, I'm sure our panel will be very happy to help you during this. If it's relevant to the topic, if you take us topic, off topic, if that's relevant, we could deal with that. And in terms of joining these sessions, I would say I would encourage the participants to participate in future ones, because these can be very valuable in getting messages out there, because for a long time we've been wanting to talk to banks and get their view on our challenges. And I speak from my own perspective. I'm Ebru Keskin, and I'm a fintech consultant focusing on payments technology and fraud prevention. And today I have with me Conrad. Would you like to go first?
Hi, everyone. So my name is Conrad Ford. I'm the Chief Product Officer at Allica Bank. Allica Bank is a new UK bank focused on what we call the established SME segment. So we're focused on mature businesses rather than the micro businesses that have had lots of fintech attention in recent years. We recently raised, well, last week, in fact, we announced that we've just raised just over £100 million in additional equity. So we're in sort of very fast growth mode at the moment. Prior to Allica Bank, I'm actually a fintech founder. So I founded a business called Funding Options, which is Europe's leading aggregator for SME lending. So I've stayed within the SME lending space, but now on the lending side.
Rahsan, do you want to carry us on?
Hi, Rahsan Kavas. I am the Director of Cash Management and Trade Finance Department in QNB Finansbank, Turkey. QNB Finansbank is one of the largest and the youngest banks in Turkey, owned by a Qatari group, QNB Bank. We serve all types of customers, from retail, SME to commercial and corporate. And I can say that Finansbank is a very innovative bank that has several firsts in the market and encouraging the innovation in the bank a lot. As a cash management and trade finance, we have a full range of products, very large range of products, but focusing on domestic and cross-border needs of customers, of course. Because one of core services is payments, we have collaborations with many fintechs, and I am happy to work with fintechs also. This is my 23rd year in the sector, and I can say that I am lucky to see both sides of the table. I was business analyst in the first half of my career. Now I'm in the business, and I enjoy very much of working this environment, always seeking for innovations. That's all for now.
Okay, Sabine?
Sure. Hi, everyone. I'm Sabine VanDerlinden. I'm the CEO and managing partner of Alchemy Crew. We call ourselves the Digital Venture Labs company. So what do? We work with global insurance companies and financial institutions to help them reinvent the way they engage actually with startups, scale-ups, grown-ups, and so build their own digital ecosystems. And this is to help them simplify their operations. So a lot of fintech, insurtech, health tech, wealth tech, any organization which can enable the insurance value chain can help simplify operation every single processes, but also we work with those companies to help them redefine the way they create and deliver value. And we do that by designing, launching, and deploying venture labs. And so those venture labs end up helping those big companies accelerate the way they engage with young ventures. So it's all about industrializing, democratizing, and hopefully monetizing the way we engage with young ventures.
Perfect. So Niels?
Yes, hello everybody, very nice to be here. I'm Niels from Daatselar, one of the 3 co-founders of TreasurUp. We spun out of Rabobank on the 1st of June of this year. So a very special experience, so to say, to first be part of a bank and now be part of a fintech company. So that's why I really like this subject for today's session. What we did during an innovation campaign in 2016 is interview a lot of SME corporates. And we learned how they were working versus what the banks were primarily offering in terms of mostly execution platforms. And we believe that there's a big gap to bridge. So if we learn from the companies and we can translate that into solutions for banks in this new era, then we will be very successful as TreasurUp. So TreasurUp nowadays provides front-end solutions in web and mobile for foreign exchange. And we're moving now into cash visibility and forecasting solutions. And we provide this as a white label services to larger banks, Nordea, OP, KBC Bank, Rabobank, Sparkasse Group since a month ago, and LBBW.
Okay, so we've got a really great panel of what I'm going to call fintechs, because actually fintechs sometimes used to refer to banks and wallets, but I think it goes beyond that right now in terms of scope, and it's about solving challenges for our end users, whoever our customers may be. It's presenting traditional financial solutions in a different way, in a different platform, using different software technologies and just general customer service requirements around that. So I think that's what fintechs are doing really well and working towards. So that brings me to my first question to Conrad. In terms of what's going on in this space, and I've been in this space for about 10 or 12 years in payments and fraud capacity, and I've seen a lot of change happen, and I've seen banks get maybe unfairly criticized in terms of what they're doing or not doing or seem to be doing. So a lot's been said about the threat of challenger banks and fintechs to traditional banks. Would you say this has been realized, and what do banks need to stay ahead of the competition? I know that's a big question, but I think our panel can jump in as well.
Yeah, so I think if you go back 5 years, there was a kind of simplistic narrative that the new fintech challengers were going to take down the big banks. And we kind of had a raft of sort of direct to customer fintechs. The reality is just a bit like in the first dot-com boom, for every Amazon and eBay that we got from there, we had 1,000 failed startups. I think you've got a similar story from the first generation of fintech, which it turned out to be really, really hard to go and take the banks on directly and go and acquire their customers. I think a phenomenon that you saw is that very often you had direct to customer fintechs were taking the low value customers that the banks at the time didn't care massively about. I would also say that what turned out to be the real problem for the big banks was not that they were facing an existential crisis. What was actually happening is that sort of pockets of really valuable business for them were being taken out by very, very focused fintechs. So a notable area there is international payments, where frankly, the average consumer or small business gets ripped off on international payments. And you had got some focused challenges, notably Revolut, TransferWise, that came and really went for that. The analogy I like to use is that if you go back to the dinosaur age, the biggest dinosaurs we are aware ever existed were these enormous Brontosaurus type dinosaurs in Argentina. And it was always assumed that once they got to a certain size, they were literally nothing could hurt them. We now think that what was actually happening was packs of carnivorous dinosaurs were actually just tearing chunks off them. So they weren't killing the dinosaurs; they were just taking flesh strips of meat. I think that's what we've really seen with the threat of fintech against big banks. It's not so much been an existential one; it's been one around taking out the areas where the banks have frankly been capturing too much value and been quite abusive of their positions. So I'd say that's the state of play. I think we're now in a second wave of fintech, which is a lot more mature. So coming back to my dot-com boom analogy, it's like the second dot-com boom, which was where the far more successful companies came about. And what we're seeing here is a lot more collaboration between the banks and the fintech sector. So on the one hand, the banks recognizing that they are, if you're a universal bank, which means you try and be all things to all people, well, you're not going to be great at everything. So there's more of an acceptance of the opportunity to partner with fintechs who are better at doing specific focused things. And actually on the other side, an acceptance by fintechs that going directly for customers when a big bank might have 30 or 40 million customers that you could serve indirectly is perhaps potentially a more economically viable strategy. And that's why I think we're seeing more and more sort of banking as a service, payments as a service type players. And actually, when you look at the most recent sort of set of unicorns, they've very much been focused on effectively white label or as a service rather than direct to customer, as we saw in the first generation. So I think we've seen a really maturing of that relationship between fintechs and banks, and actually a more grown up attitude on both sides.
So I think because there's no banks here, so I'll be the representative in terms of defending them. I think they're doing a lot to work with you guys. So I think they're working with fintechs to open up their services to a point where there's no security issues, because I think that's a major job that banks are tasked with, that they have to protect the financial integrity of our economy and have really, really sturdy security processes, which sometimes don't allow for agility, right? And that's why you guys are incorporating new services where you're protected with a layer of software or different infrastructure, and then you can create changes working with banks. So in that way, so I would say to someone who's a little bit more like a traditional bank, Finansbank, which I'm really pleased is joining these conversations, and we want to talk to different territories and countries, and it's good to have that kind of perspective as we go and move to a very cross-border global banking infrastructure, which all fintechs and payment methods are pushing towards, and actually letting us know that's what the end user wants, to have within reason agility to move about their money to where it needs to go. So Rahsan, I was just wondering if you could elaborate a little bit of the financial ecosystem is moving towards a digital infrastructure. That's what we're seeing. Everybody wants to send faster payments. They want different services that are very lifestyle orientated, different products. And so the fintechs become more widespread to solve those solutions, right? And so what is the impact reflection of this transformation on a bank's life? And what are the challenger banks doing to anticipate the structure and how they're evolving?
Thank you. From the bank's perspective, first of all, I want to say that this session's title contains what is the new normal. It is interesting, I guess, because I think at the moment there is no normal. We are in a shift that it's changing very rapidly, and this is so fast that no one could ever imagine this could happen. This all pandemic reasons, the other environment helps us to change rapidly. So I think today what we talk is our observations, our predictions, what we see, and maybe what we expect. So I will try to give some information how we look as a Finansbank, how we look at this ecosystem, and also what we do at the bank at the moment, and what we expect to be in the future. So we all agree that banking is one of the oldest industries in the world, but the demand is always being spending less time in the bank. All the people want to spend less time doing banking activities. They want to use it using mobile phones, etc. Nobody wants to go to the branch, wait there, take a ticket, and wait in the queue. This is the truth. So I think this people behavior, this human behavior, has had a huge impact on the last 10 years fintech ecosystem transformation. First of all, the digital banks was the first movement. We have a digital brand of QNB Finansbank, which was founded 9 years ago in Ankara. It was the first in Turkey. And in the parentheses, I should say that there is no, the draft legislation was declared 5 months ago by the authorities. I think next year, for example, we will see many domestic and international banks in the sector doing only digital. So this is one of the greatest trends, I think. But my expectation is that in the future, as it happens at the moment, the bank services will be integrated into one of the fintech services. It may be on the bank's environment, or it may be in the fintech's environment. As Conrad mentioned, yes, there will be more embedded environments, I guess. If it's in the bank's environment, it will take us to a bank as a platform solutions. I think this is one of the opportunities. This may be. We have a similar solution shooting that goal, but I think this kind of solutions should be preferred by most of the by the commercials or most of the SME customers, because they need to manage their businesses digitally. So they will need many tools, and they want to combine these tools on one platform. So this kind of a solution, being on the bank's platform, doing banking transactions at a time and doing the other transactions at a time, will be more preferable by the SMEs, I guess. But I think consumers would want to do their transactions on the fintechs because of doing many other, getting many other services at the same time. So this will bring us more fintech and banking collaborations, and this will speed up this API environment, I think. Again, giving some information about our market, some 5 months ago, again, the API registrations are declared, and they, we want to open. Of course, banks open APIs to the fintechs at the moment, but there will be some services mandatory for the banks to share with the fintechs. And all these type of payment services and account aggregation services will be served to the fintechs. So I think that this shift will be in mostly the fintech side, embedding all the transactions together and serving to the customer on one platform more easily, more user-friendly, and more easy to use.
Okay, so I'm seeing a lot of trends emerge in all of these conversations, and I think in terms of what Allica Bank is doing is actually touching upon your point around the SMEs receiving a specific kind of service, right? So Conrad, if you could elaborate a little bit on what Allica Bank is doing for the SMEs.
Yeah, so I think I'd start by saying why we think there's an opportunity in our segment. So there's been much fintech innovation for very small businesses, which in the UK would be about 5 million micro businesses, but there's been very little innovation for 500,000 or so established SMEs, which typically have a few million turnover. And actually, our segment is a much bigger segment. It's a much bigger proportion of the economy, and it's also more important in terms of our future growth and jobs. So why is our segment underserved by the incumbent banks? Well, the incumbent banks really have two major revenue centers. On the one side, they have mass market consumers, which in the UK would be about 30 million households. At the other extreme, there's very large corporates and governments, of which there's a few thousand. So established SMEs, they kind of sit awkwardly in the middle because you can't serve it. They're too complex to service with a consumer banking platform. And then the traditional model of throwing people at the problem that you use for large corporates doesn't work either. So they get awkwardly stuck in the middle. They're not unique in that respect. You could also say that about mass affluent customers. So customers who aren't very rich, but equally are more wealthy than the average person. So they're stuck in the middle. And really at the heart of our competitive strategy is a belief that if you build a dedicated operating model that's aimed specifically at that segment, all the way through from your foundational data models to your proprietary technology, and to also servicing capabilities. For example, what about if you can have relationship management on an iPad at a client's premises rather than a branch? So a kind of entirely new operating model that's focused specifically on the needs of this very large segment. And that very large segment are very unhappy with their banks, certainly in the UK, and that will be the case in many countries around many major economies around the world. So really for us, it's around having a dedicated operating model. And in terms of what that means for collaborating with other fintechs, you know, where we see there's kind of a commoditized fintech capability, for example, open banking would be one example. It makes no sense for us to go and build our own connectors to open banking. It makes much more sense for us to work with one of the many players who offer that service. So really our competitive strategy is where we think there's proprietary competitive advantage. In other words, no one's done it very well yet. Then that's exactly where we look to build our own proprietary capabilities. But then we collaborate with fintech players where we think it makes sense. And we kind of, in that respect, we have a hybrid strategy.
So perfect. In terms of what what people want and what the bigger banks are not doing. Niels, would you be able to elaborate on what solutions you're providing and what are the trends that you're seeing post-pandemic in terms of what needs people have for your customers specifically?
Yeah, sure. And further also to what Conrad said. So if you look at the SME market, it's important to distinguish which SMEs we're talking about. So I think that if you talk about the smallest company, let's say up until 1 million euro or sterling or US dollar turnover revenue, they are rapidly changing in terms of digitization. There's a lot of nice solutions out there, a lot of times SaaS solutions, for example, in bookkeeping, which makes them work more professionally quite quickly. And then you have the large corporates, which are all multi-dealer, which are all Swift, and they're very well catered on the SAP side, et cetera, et cetera. So for TreasurUp, the end users are mainly in between those two categories. And that's where, maybe further to what Conrad said as well, they might not be perfectly banked at the moment, let's put it that way. Our company is mainly about the upside for banks. So we are saying banks have pretty good playing cards. They have the people, they have the products, they have the balance sheet, they have decades of experience, they have the credit lines, the credit machine. And so in principle, banks have a very good starting point. The reality, though, is that the way that they've started organizing themselves over the last decades does not make them very agile to move ahead fast enough. So what we are saying as TreasurUp is primarily in that segment, let's say from 1 million to 500 million. And that's where there's a lot to improve, but that's also where it becomes complicated. Because a lot of times it's not single bank or bilateral communication. There's multiple banks involved. To learn how those corporates work is not a unified way. So we look at the chain. So the front office is maybe even more important to begin with than the platforms and the infrastructure. So the front office needs to learn how these medium-sized firms actually work, and they need to become a little bit more tech savvy. Because if they know about what's out there in the market, what's possible, then these people can actually bring that back into the bank. Then the first layer that they touch upon in the bank would be the IT department and the portal departments where those corporates are being served. There, a lot of banks are still trying to build things themselves. And what you see is if you build things yourself, then the neighbor bank is building a similar thing for a few million, and it's almost looking the same. So those expenditures, those capex levels are so high, and then you go all the way up until the departments. So departments have an annual budget round, they have annual projects, that also doesn't cater for agility. So what I'm trying to say is if you look at the whole chain from the corporate to the front office, to the departments and their products online, as well as to the core banking platforms, you need to look at the whole chain. And that starts by people high in the bank believing in that and allowing for things, and that's where we can learn from neobanks, to really look at all the layers again from a different point of view.
I think the theme is generally that, Niels, you've just admitted that it's complicated, right? Solving problems, it's very hard. So if you were to point at a large bank that does something quite well and then try to solve a problem they're not doing for a specific segment of customers, you realize that it's very complicated and it requires a lot of time and investment. And actually, if they're doing a really good job of something and they're invested in the business of doing that, maybe that's the whole point here, that the fintechs do need to emerge and solve different problems for different people, because we have a massive playing field of the entire world potentially when we go trading online and start doing business online. And I think that it's fair to say that there's enough space for all the fintechs to innovate and to work with the more traditional service providers like the banks, who do a really good job of protecting our money and creating the infrastructure. And now, as you can see with Finansbank, they're willing to work with others, they're willing to provide solutions where they can do it themselves or where they have to be more open to those solution providers like Allica Bank to incorporate services that are specific to customers. So that brings me to Sabine. So you deal with the merchants, or you deal with a different segment, and what kind of trends are there emerging post-pandemic in terms of what the requirements are, what people need from you?
So, I mean, I just want to also echo a statement you just did, you just made, Ebru. So when you look at fintech, there is today around, I would say around 20,000 fintechs out there, which have raised around a little bit more than $500 billion in investment from a variety of investors. And that would include for me my insurtech startups, in addition to the payment, alternative lending, embedded finance, crypto, and wealth management organizations, which are trying to elevate and change our financial system. So some of the, I think of the trends I'm seeing out there is, I mean, the most basic one, right? The one we have experienced during the course of the past 18 months, which is working from home. Just the fact that we are working from home has changed the way we look at digital banks and how we actually bank with those organizations. For me, when I look at some of the demands I'm getting from large corporations, you know, a lot of the demands goes into teleconsultation, teleconferences, online education, online telebanking. So all this ability to serve whichever segment of the customer, whether they are consumers like you and I, or small and medium-sized enterprise, or the small of SME or the M of SMEs, it's about actually reinventing the way we are doing things. So some of the trends I'm seeing is that probably more demand on online-based activities, for sure, as we have seen, but it's all about serving the customer better. And I think gradually some of the point made by Rahsan, Niels, and Conrad, I think come together in this embedded finance, embedded insurance, or embedded distribution world, where we look at the customer and how he or she needs to be served. And what we are seeing is, because the big banks and the big insurance companies and the big financial institutions cannot do it themselves, they need to start designing a digital ecosystem which allows them to start serving the customer, like us pushing on our Netflix or Amazon, where we are literally served within 24 hours in front of our doors. So that engagement is becoming completely friction-free, seamless, which means that we need to serve for payment, but we need to serve for other services, which would include potentially how you go and rent your next property, as to how you actually buying your next insurance product as well.
Okay, so quite interesting. So in terms of what you guys are doing and what the banks are doing and the challenger banks are doing is recreating an entire world online, right? So you're just bringing our physical world into the digital world, and I think that's where all of this challenges are coming from. You're rebuilding a new world for us online, and it comes with a lot of challenges. So just going back to what we the statements of our panel here, and learning from fintechs to enhance digital infrastructure to become more agile, I think that's what banks are doing, right? So they're trying to see what can they do to become more agile. Finansbank, what are you guys doing in terms of allowing for that, and what are you building yourself? Because you mentioned something about there being sort of regulation around how banks and services will be categorized. So digital banks and services will have to have different licenses, and fintechs will have to have different licenses. So what are you doing in terms of allowing fintechs to become agile? And also, would you consider yourself a fintech?
At the moment, my short answer is no for the banks, I think, because banks are governed by tight regulations, and there are tight regulations for the banks to follow. And I'm sure it is important, it is necessary to protect both banks and the customers at the time, but there need to be some revisions, I think. This is one of the issues for the banks. And as Neil, I guess, mentioned, banks has the team, experience, credit lines, and etc. It has a very strong background, has a very huge knowledge about the system, but also a bit slow processes, because they are the large institutions. So it takes time. It takes more time to develop a new product in a bank. As you mentioned, maybe it is served to all kinds of customers, so it will be a greater product to serve. Fintechs are faster in that ground. So banks need to change how they do things. Banks need to tailor that processes at the moment because fintechs are faster. But as fintechs grow, I am sure they need to figure out how they serve excellent user experiences. So this will be an issue for the fintechs, I guess. But we are at the start nowadays, so it will take time to grow that much and consider that kind of issues. But when we look at the banks, it has 100 years of past, and banks processes are slower than the fintechs, of course, and we need to change some of our ways of doing to catch up or to collaborate with the fintechs. For example, at the moment we have a collaboration with the expense sharing application. We, as cash management, provide a wallet service to that application, and we are trying to develop at the same time. Sure, we are slower than them. We have our own processes. It's for sure.
That's a key point here right now, that the banks are struggling, so they can't keep up with all of these new trends of the end users. You know, you said people want digital solutions and really fast, and you're held by obligation. In this case, Niels, what's your company doing in terms of dealing with that? So what do you think of the main struggles for banks to overcome to become more innovative? Like how are you guys dealing with that?
Yeah, so what we do, we provide multi-channel front ends in that area of, let's say, 1 million to 500 million companies that the banks have, so the commercial banking area. We started off in foreign exchange, and we're actually saying that if you look at what these companies are doing, they a lot of times start with cash visibility, like how many dollars do I have today, in which entities, and which bank accounts. So for that, quite quickly, you need to look at open banking, because a reasonably sized company easily has 2 or 3 banks. So that's why we are experimenting a lot with open banking, like how can we get the company to have the total overview of their US dollars, as an example. If you look at that segment, then open banking has by far not reached the maturity level. It's mainly in the retail area, but if you want to get it right for a corporate, it's very difficult at the moment. So what we do is we're saying to banks, let us try to do that for you. So first of all, we're going to try to get your corporate the total insights in their dollars with open banking aggregators and maybe your own APIs, just to get the total truth. We're going to build that in a front end, web and mobile, and if needed, APIs. Because all of that is needed in order to serve those mid-caps in the next 10 or 20 years. You need to be ready for all of that. And then once they have the insights in their liquidity, which is a lot of times the start of any journey, then you can move towards foreign exchange hedging, payments, credit insurance, trade finance, forecasting. So what we're saying is that a bank should draft a picture of what are they good at in terms of developing own stuff, and what could they better leave to fintechs. And that's why I really like the presentation of Sandra Lem this morning from Citi. It's about the partnerships of banks and fintechs. We don't bite each other, we can really help each other. And one of their 3 partner levels was white labeling, and that's what we do. So we white label it for the bank, and we're saying we can run much faster, so let us do that part. And
you do a lot of partnerships with banks, and that's what TreasurUp is essentially doing, isn't it? It's providing services for the people that need a specific service from multiple banks. Could you elaborate a little bit more around that?
Yeah, so if you do foreign exchange hedging at Nordea or Sparkasse Group, for example, in Germany, you actually use our front end, web and mobile, but it's just their own logo, their look and feel. But more importantly, that's why I don't really fully believe in the black or white buy or build. Something in the middle is more important, maybe, to talk about the partnership. Because if you look at, for example, these 2 banks, their regulatory requirements are slightly different, even though it's both Europe. And that means that if we partner with 2 banks already in Western Europe, then the front end needs to be slightly different. And that's why we need to adjust to how that bank works, regulatory-wise, but also commercially. So we provide them with that white label front end, and we try to give them new releases on a monthly basis. And those are very high speed iterations, which is challenging most of the banks because they need to test it. We manage it for them in the cloud, but still we need the bankers and the IT department to be on that pace. And to run on that pace, that is maybe a good thing. It might not feel comfortable in the first couple of months, but actually I think it's good, because if we keep on changing that fast, and if we invite them to get the feedback from their company level, so from their clients, then if you get that feedback in, if you use the data on how they're using it, then you keep on iterating very fast. And I think that's the model that a lot of banks need to move into. Because once you get into that fast innovation model, then it doesn't really matter if you need open banking or if you need certain machine learning algorithms, because that's just quite easy to get in the market, as long as you know why you need it for and what you need it for.
Okay, perfect. Thank you.
Yeah.
So I think another theme emerging is also one of our points is we're leveraging a lot of technology to shift the digital infrastructure. In terms of what everybody's doing for that, I think banks are allowing sort of integrations to come in your case. So you're integrating with various banks, right? So that's how you're enabling these services and solutions that you're creating for a niche customer segment and solving some of the problems. And Allica Bank, in terms of what you're doing to serve SMEs. So what does that look like? What are you, how are you leveraging that technology to shift the digital infrastructure for banks and for the solution finders, like people who are trying to access your services to deal with the problems they have?
Yeah, well, I think the most important point to make is that there's kind of a recurring theme when people talk about fintech versus banks, that the banks have legacy technology and the fintechs have modern technology. The actual problem goes much deeper than that for big banks. Most big banks. They have legacy culture. Yeah. So the way that banks organize themselves and execute is really decades old. Yeah. And if you look at other sectors which aren't protected by regulation and aren't sort of oligopolies, are decades ahead in terms of their culture and organizational design. So if you compare, for example, a proper digital neobank, of which the UK has produced 3 or 4 world-class players, they are organizationally utterly different to traditional bank. They run in highly empowered cross-functional teams. Now, the problem that the big banks have, and they eventually have to face into this, and it involves, frankly, senior managers firing themselves, is that the people who've risen to the top of most traditional finance institutions are highly territorial. They're very, very functional, and they like to hoard power. So the classic big bank way of being agile, for example, is that they will have a Jira board or Trello or one of those tools, and they will deliver in 2-week sprints. But in reality, the 2-week sprints are delivering a roadmap that was, generally speaking, still produced by 20 middle-aged men in a boardroom a year earlier. So they think that they're being agile, or maybe they pretend to themselves they're being agile. I don't know what it is, but fundamentally, it is a cultural change that's required. Now, that's a very controversial statement, but I believe that COVID means that we can now say that it's definitely true. So let me explain why. We have had major financial institutions saying for many, many years that they can't move quickly because of legacy infrastructure, because of regulation, all the common excuses as to why the middle managers in large banks say they can't do anything. Well, COVID came along. Let me give an example in the UK. In the UK, the government rolled out an emergency lending scheme when the first COVID lockdown hit, to distribute emergency funds to UK businesses. And all of our major banks managed to deliver brand new lending products in typically about 2 weeks. Yeah. Now, if it had not been for COVID, and the fact that this was, senior government ministers on the phone to senior executives in big banks, then there would have been program teams saying this is going to take 3 years. There would have been waterfall charts, Gantt charts, endless bureaucracy saying why it was not possible to do. Yeah.
And there were sometimes, actually.
Yeah, the reality is when the time came, when they needed to move quickly, they were able to move quickly. The problem is one of culture and talent. They have too many middle managers who are very average and whose leadership and management style is literally decades old. And the reason that's happened is because it is largely speaking a protected industry. It's protected by regulation. and other things that work against proper competitive dynamics. What fintech has done is forced banks to actually really think hard. Now, I would say of the major financial institutions in Europe, only a small minority have actually begun to really change their culture. There are at least one Dutch bank that is now organized in what's typically called the Spotify model, this utterly different way of empowered cross-functional delivery, where you actually set people objectives, you let them get on with it. There's at least one major Spanish bank. So there are pockets now emerging where major financial institutions are saying, well, okay, why is it that the likes of Netflix have managed to develop enormous businesses while we've been sitting here slowly dying with a declining return on equity? So we're beginning to see them get their heads around it, but it remains a very small minority of the overall population. And actually those that don't get their heads around this and make the change within probably 2 to 3 years are in deep trouble. I think we are COVID has kind of moved forward the agenda, shown banks what is possible. And perhaps now it's time to actually engage with the people in the organizations that stop things getting done.
I would love to add a point here, Conrad, as well, which is when you look at big financial institution, the way people are measured is also, and incentivized is also very important, because if you do not change this, you cannot change the culture. And so to be able to become a fintech or tech-enabled business, you need also to understand how you are going to incentivize the behavior to actually become far more agile and flexible in the way you are doing things, and recognizing new customer needs as well, which are out there, which is, as you said, Conrad, all linked to legacy behavior.
Yeah. And maybe to add one more thing to that, if business lines would also be working more closely together, that would even also allow for much more opportunities. For example, cash management / transaction banking working with financial markets. That seems so logical, but is not always the case within a bank. And then you could go a bit further to asset-based finance, the lending departments, etc. So that holistic approach is also a very important one to get things better, because you would need that in order to have cross journeys, which your clients would actually at some point demand, I would say.
Okay, so that's a great point. And Sabine, I was just wondering if you could because you're a service provider, I think it's more consultative services, whereas we've got banks and fintechs here. How are digital ecosystems changing the financial landscape? And so if you could just give us some examples of existing partnerships, to Niels' points, to demonstrate the point, like what kind of partnerships are we seeing? What are you seeing?
So yes, so just the first point is, if you look at big tech, 6 out of 10 of the companies which are the world highest market capitalization are using digital ecosystem to actually grow their business. And if you actually look at Gartner studies, 76% of the organizations which are the most successful out there are using digital ecosystem to succeed. 50% of the average are doing it. So there is a proof in what Conrad and Niels and Rahsan are saying, where you start working with others and you actually start understanding your business model and understanding how you start breaking the bits operationally to serve with other tech organizations, you may actually be able to rebuild and rebundle your business model in a much more agile way, which serve for customer needs. So I think it's important to understand what the digital ecosystem is as well. So it's interconnected, interdependent groups of companies, people and things coming together to solve for a specific problem. And what I love with that conversation is, whether you look at SMEs, or if you are looking at financial, segments which needs to be looked at, which are underserved market segments, everybody needs better financial services to drive their own resiliency. And so by looking at the customer segment and really starting breaking down what the problems are and how we can solve for those problems, you can actually get rid of the legacy challenges of big companies and start looking at fintechs as ways to rebuild that full value chain to serve the customers. So within digital ecosystem, you have people manage the ecosystems, which actually have understood what are those breakpoints are, and start building mini communities of services to serve for all those, those customer segments. But not everybody needs to be managing I would say, managing orchestrator, people can be participating nodes as well within a digital ecosystem. But the key thing is to understand how to serve a customer, how to deliver value, and start breaking down this value chain to rebundle it in some ways, which is interesting. Now, who is doing some great things? I think in finance, there are some really interesting brand doing things at the help, actually. In payment, for example, you would have, I'm thinking about Grab, which has been rebuilding some aspect of their ecosystem by buying or partnering with very specific organizations, like Lazada being one of the Alibaba-owned companies. I'm also thinking about Unicorn Pioneer, which has also been doing some stuff with eBay, getting rid of PayPal to actually redesign their own ecosystem with Coupang as well. One I really like is Klarna, which has been doing some work with Stripe. And Stripe, the interesting thing about Stripe proposition is extending as well into sustainable finance, which is looking at some of the new trends coming to market. But the key thing, I think, sitting across a lot of the example which are sitting out there around digital ecosystem is understanding the power of embedded finance and the future of embedded distribution, I think, as well.
Okay, so thank you. If there is any more questions, we're in the last 5 minutes of our discussion, so I have a few questions. Actually, I have one amalgamated question that I want to ask each panelist in terms of their perspective. We have a question, actually, so I'm going to put this to the panel, and anyone willing to take this. What would you do if you were a CEO of a traditional bank? Is all hope gone? And I'm going to tie this in with a question I actually had. What would it take for banks to become competitive again? Neil and Conrad, and also Rahsan, I think you should all answer this question. It's a good question.
I think I would really be stepping in quite radically. I would try to stipulate the line, like, how should this bank look like if it still does not want to be eaten fully by all new services around it. So what needs to be left of the bank in the next 5 to 10 years where we really want to stand behind, because we believe that that's going to be the bank over the next couple of years. And then to look at the resources. Like, what resources do we need for that in order to make that happen? That could be internal resources and external. Most likely it will probably be an ecosystem. And how do you define the objectives and key results to get there? So indeed, what Conrad was saying, a lot is based on retention, that people keep sitting on their seats because they earn a lot, they really have a lot of people around them. That's the wrong incentives. It should be about the bank and not about the individual, because if the bank is doing well, in the end, it will also be good for the individuals working for the bank. So in that area, I would probably step in and keep it short, maybe, for this answer.
Okay, I think we should do the whole round if everyone takes a minute each to answer this. Rahsan, what's your perspective? If you were the CEO of a traditional bank, is all hope gone, or are you guys doing your part to stay in the game?
I think what I should do was to find a new way of serving a new something competitor. I mean, trying to copy what others do, what fintechs do, or what other banks do, try to find a new way of serving my products in a new way, which my customers would like. I agree most of the issues we talked here, but I think we should keep in mind that there's a scale issue of the banks, and there are current operations they should be serving perfectly. So this is one of the major issues. As a CEO, it would bother me. It would be one of my problems, but of course, a new product, putting a new product on the line, collaborating with the fintechs, offering a new service would be very important. And I should look for a collaboration with the fintechs, but a new service provider. I mean, not working with another wallet solution, not working with another e-commerce solution, but finding a way of doing something new with someone new.
Okay, so Conrad, you're not too far away from this question, but you're actually a challenger bank. So if you were in a traditional bank, what would you do?
So firstly, I would say the answer isn't consultants. So a strategy consultant would give you a slightly optimized version of a traditional bank. That's what they're very good at doing. And a tech consultant would basically propose a £100 million transformation program, which is utterly the wrong thing to do. And of course, they have a huge vested interest in proposing precisely that. I would recommend that they vastly cut down the number of layers of middle management. AVP, SVP, VP, VP, it's ridiculous. Yeah. And people who are obsessed with titles are the wrong people for your organization. Yeah. So I'd vastly cut down the number of layers so that there's less bureaucracy, less people standing in the way of you and your customers as a CEO. And above all else, I would promote the people who believe in really empowering their colleagues, empowering their teams, and are happy to delegate their authority to cross-functional teams that, as Niels said, are focused on goals and OKRs. They're not told what to do, they're told what to achieve.
So we've got last minute. So Sabine, this is something you do all the time. So what would you advise, I guess, to those CEOs?
So, for sure, thinking out of the box. It's interesting when you design, labs, which are using very programmatic approach and VC-led approach. So everything we do use much more venture capitalist or venture, what we call corporate venturing approach to getting corporates to work with young ventures. You have to change mindset, and you must not be fearful of working with your competitors, actually, which is really hard to actually say to a CEO of a company. But for those I've seen doing it well, but for example, when you actually organize a lab or an accelerator, you have many of your competitors participating to the same thing to find the very best of the startups they could collaborate with. So I would say, don't be fearful of your competition. Just break the mold, maybe reverse your organization, make people who are probably bottom of your organization much more visible at the top, give them more accountability, make them owners. I always say to my guys, I'm sorry if I'm going to insult some people, I do not want employees. I want owners in my organization, people with accountability, which are going to take things and are going to get things done. And what I see from the financial institution I'm working with, that is what they are learning to do better as well, so that they can invite and be exciting for the startups which may want to work with them.
That's great. So thank you for the panelists. This is all we have time for. And I just want to thank everyone who contributed to this panel and everyone who took the time to listen to us. I think the key message here from all our panelists is to collaborate and to open up your system within reason to all of these challenger banks, because I don't think they are creating competition. I think they're bringing collaboration and good work environments. And with nearly 8 billion people on board almost, I think there's a opportunity for everyone to come, innovate, invent, and improve lives for everyday individuals like myself. So I hope you enjoyed this session. I'm going to be around for a couple more tomorrow. So have a wonderful FinTech Connect event, everyone. Thank you.